Recession Watch. ABC's chief economist sees difficult times through 2025. But why construction stocks are like honey for the bear market. And we are back. It's another walk, probably the greatest episode of all time. That's actually been the running case for all 126 episodes we've done. I don't think we, unlike this economy, have ever regressed in our greatness. It is your pirate captain, podcast king, Russ Briscoe, another week. Let's just get this right out of the way. Welcome to the studio. Do not be intimidated by my golden mic emanating sheer brilliance, but welcome to the studio, the machine. The machine, like the prodigal son, doth return to the build stable. I think I'm mixing all kinds of biblical things there, but the machine, you've come back to us.
A year in the making.
I mean, seriously, it's really great to have you back. You've been, what have I called you before? The guy behind the guy behind the guy. Magic maker of the podcast that we do around here, a connector, not like, Carlos, who's the Paul Revere of construction, but a connector nonetheless. So congratulations, you've recently finished a construction management program at S&amp, right?
I have, yes.
If you could go back again, tell me top 3 reasons why you would go to the University of Texas instead.
I can't even respond to that.
He doesn't know about the fun and games we play around here. Although I do. I know that the Longhorns got sent home by the Aggies this past weekend. Isn't that right, the machine?
That is correct. We beat y'all in baseball.
Is that why producer Austin has decided to just leave me? You know what producer Austin did with this? It's as if he decided to just go on vacation and leave all the lights on and the faucet running and the oven open and on just to see, I'll be back whenever. Let's just leave all these things a mess.
He didn't even get the mailbox for us.
We didn't get the mailbag. The lights are all messed up in here. The soundboard is deactivated. But good thing the machine is here because your brilliance and eminence just kind of covers for it all. You're welcome, the machine. Thank you for helping us this week. Producer Austin is somewhere, doing, poison dart making or whatever his latest hobby is. Flying planes. Maybe he's building trains or robbing trains. We will catch him next week, though. He'll return?
He will be returning next week.
Good thing. What we will get into this week, of course, is what we do every week, which is take a look at the data. Cruising over to constructioncitizen.com, which publishes the weekly AGC Data Digest, prepared by Ken Simonson for us. Seeing bid price rising and matching a 12-month cost increase, but inputs rise faster in May and put pressure on profit margins. So that's our headline this week. Bid price rises and they match a 12-month cost increase, which is great news on the surface, right? Contractors' bid pricing rose at roughly the same rate as their input costs for the first time since September 2020. However, for the month, that is the month of May, the change in input costs outran the change in bid pricing. So this implies pressure on contractors' profit margins nonetheless, specifically pointing to the producer price index for material and service inputs to new non-residential construction. That's a 1.9% increase for the month of May. So it's like madness continued here. There's some good news on the surface, but with the price pressure on core goods, it's still going to be very challenging. There have been mixed changes in prices for construction inputs since the Bureau of Labor and Statistics collected prices for the PPI calculations around May 11th. So this is really a fast and volatile moving target. One of the things that I saw from the Energy Information Administration report, which reported last week, national average retail price of diesel fuel, the machine, do you have a guess?
$6.50.
Oh, $5.72. Although I like where your head's at. We may see $6.50 diesel. That may happen. An increase of 9.5 cents in the past 5 weeks. I mean, you got to really follow that. Diesel goes into every single thing you see on the Walmart shelves, from the production standpoint of the plastic to the shipping costs, both offshore and onshore. In other words, what was that old saying? If it got to you, a truck brought it. I think that was like a Teamsters thing from back in the day. Still very relevant. I mean, you're out there on the roads, you're going to see those Walmart trucks. Gosh, you know what? I see the machine all the time now. I see the Amazon Prime vans driving recklessly. In some senses, no free ads. You're a Prime guy. I almost guarantee that.
I am.
100%.
I love it. You can get your things there in 2 hours or less.
See, I like my things to take time. Nothing worth having was worth rushing for. And I don't mean Russian, like Russia. I mean like waiting, like patiently. One category of cost that may improve soon, however, is freight charges. And this is being driven by a big improvement in driver availability and a flattening of overall freight demand. So I know we were talking about diesel as being a skyrocketing cost, but it's great to see the labor market showing up and folks getting behind the wheel. One of the things that I also keep an eye on, and my hero and best friend, both of those things, Ken Simonson, also covers. Over the past 12 months, we see the Dodge Momentum Index. And it was nice to see in May, 7%, rising 7%. That's an upwardly revised reading from April. And over the past 12 months, a 17% year over year. This index is a monthly measure of the initial report for non-residential building projects in planning. This is shown to lead construction spending for non-residential buildings by a full year. So still the story is that the demand is there in non-resi building. We've talked about the Architectural Billings Institute and that statistic as being a leading indicator of construction spend, particularly non-residential construction spend. Dodge Momentum is a great one as well. Demand still classing as strong. Following the aftermath of COVID-19, home buyer preferences for the suburbs have eased. Whoa, I thought everyone was running out to the suburbs and running out to these big sky western states. On a 4-quarter moving average year-over-year basis, large metro suburban counties' single-family construction market share drops from the first quarter of 2021 by 1.3%. But this is in keeping with what we've been talking about, of course, week over week, multifamily. A lot of people in the meat of their buying property years, in their 30s and 40s, more than ever before, are looking for value in multifamily building. And that's why our multifamily builders are, bullish in a bearish environment. But what do you say, Machine? Another award-winning ACE A++ edition of the data?
A++, maybe even another 2 pluses.
I'm telling you what, God, it's testament to you being the guy behind the guy behind the guy, because you stepped right in here, and from what I can see, you've hit a home run so far. Speaking of strikeouts, Producer Austin didn't leave us with any insight into the mailbag.
We've actually got something for you now.
Late breaking? Just when I thought all was the machine, you've done it again. Pass me that canvas knapsack, and I will pull a letter out of it. All right. Normally there's moaning and groaning and all kinds of divided mind about what the heck I'm getting myself into this week, but let's just go for it. I'm just going to rip right into it. Okay, here we go. No subject, from no one. So Here we are. I'll read it out. As a native son of New York, does Russ side with John Katz as a Mets fan? Is he a Yankees fan? Or does Russ not care about sports? What a great question. Obviously from one of our millions and millions of listeners. Whomever anonymously sent that, obviously a huge walkhead, huge fan of the show. My only complaint is John Katz. Is this Finance Friday? I mean, come on. Let's, I don't want to affect my ratings going that direction. But no, honestly, John is a dear friend of mine. He's one of the world's biggest and greatest Mets fans. I am not. I grew up in the Bronx, New York, Yankee fan, but I'm like a 1990s Yankee fan, maybe early 2000s. The peak of my baseball affinity and give a crap was in 2005, I would say. After that point, a little blip in 2009 when the Yankees beat the Phillies in the World Series, but I don't know, it sort of passed me by. I think baseball is really fun to attend in person. It's very conversational, relaxed, great pacing. It's just fun to be at the park. But yeah, I'm largely in a not give a flip kind of aspect with sports. After a while, it just gets strange rooting or cheering for other people. I don't know. I'm just more about what do I got going on, I guess there's civic pride, sort of. You want your city to do well at something. I get the alumni thing. You want your school to represent itself well. You're proud about that. If there's one sport that I can still get behind, it's hockey. Really like the hockey. I'm getting interested into the soccer deal. Austin's got a team. I like that. But, yeah, I'm going to pass. I'll have to say I don't really care. I mean, you're obviously a huge Texas A&M sports fan, right?
I don't want anyone calling me a 2%er, but definitely go to the football games, but don't follow the sports that much.
Gotcha. Yeah, I'm with you, the machine. I'm with you. I don't know. Do you follow my point about this idea of cheering for someone else to do something that's a little odd?
Yeah, for sure. It seems a little odd.
Yeah. Maybe I should just hit up the public park and just watch a couple people play tennis and just go crazy. Yeah. I don't know. I guess the gambling thing can come up too. If I were interested in gambling, which I'm not, then I think I would like sports.
Much higher stakes at that point.
Yeah. Yeah, you got skin in the game. Unlike apparently how producer Austin feels about this program. No skin in the game, no stakes. He's out there chasing down Dr. No or whatever the heck he does. He's definitely on I think he's doing a cross-Atlantic sail. I think that's what he's doing.
Yeah, he's still editing this, so he might just bleep us out the whole time. We'll see.
Oh, he's going to edit?
He is.
Well, producer Austin knows how I'm really into the cinema verite. I love the truth to get out there, as few edits as possible. Hopefully he edits out the fact of, the matter with respect to the 2%er stuff, though. We don't want that getting out. All right, what we do want getting out is the news that you cannot afford to snooze, the latest and greatest in commercial construction. And this is, it's a cracker of a week here. It's an interesting time to be interested in interesting times. We're going to start with, and I know this audience, and I know you guys are following the markets. You're watching Joe Biden fall off bicycles. We're all in it together. But what I will say is Anirban Basu, chief economist at the ABC, is, all jokes aside, one of the main, if not the main, along with Ken, voices in economic data and news making in terms of the construction economy. And what Anirban shares with us here recently as just a few days ago, is that the Federal Reserve's tightening policies to fight inflation will likely drive the economy into a recession, either later this year or at some point in 2023. When I was last discussing this topic with Ken Simonson 6-ish weeks ago, as well as some others off mic, movers and shakers in construction businesses, large general contractors, property developers and such, it was unclear to those gentlemen that we'd really come through this tightening in a recessive position. But I think more and more it's sort of a fait accompli here. The association's monthly release on construction material costs recently came out, where Basu came out by the ABC, that is. Basu points to the construction input pricing. Input prices are up 21.4% from a year ago. That's overall, with non-residential construction input prices up 21.9%. Overall costs rising 2.3% in May, which we touched on earlier. So you've got this pressure up with PPI, producer price indexing, and you got cost pressure up. These cost increases largely stem from supply side issues. We know about the war in Ukraine. We know about the rising energy prices. Why you think those energy prices are rising is another matter. That's for another show. And manufacturing and distribution issues in the supply chain. But what the Federal Reserve most directly affects is demand for these goods and services, not supply. And as the Federal Reserve ticks up the cost of money, we'd expect the demand for construction goods and services to slump. We haven't seen it yet. And that's really where this claim is kind of, the ellipsis here is the ... but it's coming. Basu's warning reiterates his earlier prediction this year of a pending recession when he argued that policymakers had misread the severity and duration of inflationary pressures. Now, he said those missteps could dog contractors for 3 more years. So, Anirban Basu, naming names. Hot take alert. I mean, I'm kidding. He's the chief economist. He should be pointing right at the Federal Reserve. I agree. I think now it's a dark kind of jab or joke, this term transitory inflation. There's no such thing as transitory inflation. There's inflation and there's not inflation. So what we were bandying around as being transitional or transitory inflation, in fact, was just the onset of inflation. This is a triple threat of rising prices, supply chain issues, labor shortages, continuing to stand in the way of strong demand. That's where we've been. If that demand sags with the cost increase in money, in other words, interest rates moving north from here, that's where I think we're going to see the recession come through. Certainly growing odds of recession, dampening. Otherwise, we always have the like as we talked about the Dodge Momentum Index, we talk about the ABI indexing, we talk about the crane count in the sky. We've done a lot to drag out pretty strong demand statistics for us here, but the Biden administration and the Federal Reserve have publicly conceded that they've made mistakes in their handling of inflation since the pandemic began, and that is according to the Wall Street Journal. By the way, maybe we can link it to this program. I don't know if you know how to do that stuff, the machine. You can make anything happen, sir. You're a talented Texas Aggie. No, but I was going to say that there's a great article published by the Wall Street Journal on Monday, June 20th about construction labor. I believe it got above the fold, front page. Quote, inflationary pressures show no signs of abating. For months, economists and others have been expecting inflation to peak and then subside. End quote. That is Anirban. He continues, Elevated energy prices are now circulating across the economy, affecting manufacturing and distribution, and there is little prospect for inflation to meaningfully subside during the weeks ahead. The Federal Reserve, in turn, will tighten monetary policy and raise interest rates, but that will suppress demand over the rest of the year. Eventually, suppliers will then respond to this diminished demand. That dynamic will quite likely drive the economy into a recession either later this year or at some point in 2023. Line in the sand. My take, I tend to totally agree with that. We're seeing a lot of project starts here, qualitatively, anecdotally here at the company. We're very much involved in working with contractors on commercial construction jobs. There hasn't been any kind of lag or indicator on the ground yet, but all these things swooshing around are hard to ignore. The other side of this, however, as I indicated in the top of the show, in the opener, why construction stocks are likely honey for the bear market. Construction companies could become Wall Street darlings, armed with strong backlogs and robust infrastructure funding. We know that the Federal Reserve policymakers will continue to aggressively combat inflationary pressures. The ominous confirmation of the yield curve for government bonds, in other words, the difference between interest paid on 2-year and 10-year treasuries, is getting closer to bending in the wrong direction. That is a widely adopted sign of a coming recession. But all that said, there are several reasons why construction firms may show some real resilience in the face of a broader sell-off and a sagging economy, not the least of which is new project pipelines worth billions and plenty of future prospects to bid for the $1.2 trillion in Infrastructure Investment and Jobs Act, the famous infrastructure bill. So I feel like I'm always doing this. It's like thunder and rainbows, gray clouds and blue skies. I do think that we're postured for an economic recession in the broad market economy. That said, I think that construction has some fundamental strong motion. To be sure, interest rate sensitive sectors like income producing properties or technologies are likely to take hits. But, good old fashioned non-residential construction, there's a lot of reason for optimism, let alone the big backlogs in projects. If you're an investor seeking a safe haven, the fire hose of infrastructure funding, I am mixing metaphors. The machine, I know this. I know it. Safe haven, fire hose, get it. But this fire hose of infrastructure funding, which has just started to pump, it will continue to pump for 5 years. Plenty of reason behind that to be bullish on construction. Public construction spending, at least, that'll hold up even if the economy slows dramatically. So shy away from risk where you can. Stay dug in on the job. Things like apartments, hotels, retail build-outs, offices. That may be a different game at play, but there's certainly a lot of stability to be had in government, public jobs, manufacturing, industrial, core infrastructure building. But as ever, it's balanced against the costs and the challenge of those costs delivering these construction services. So yeah, ultimately, as I said, a bit of a mixed bag. Do be advised and do continue to turn to us week over week for the latest and greatest news that you can't afford to lose in commercial construction. Next week, we'll be back. Full staff, machine included. So good. What'd you think of your first spin on the pirate ship?
It was fun. I'll have to come back on sometime.
What was the most fun thing about it? And you cannot say the absence of Austin.
Getting back in the studio.
Ah, gotcha. Yeah, they rarely let me leave. What is it like outside? Is it still warm? Is it still free? No. We have fun around here. Do hit us up at grow, GROW, at build, BILLD.com. We'll catch you next week. Until that, remember, you never walk alone. Thanks for hanging out.